Peekaboo. You done invading New Jersey? I don't know, what are we up to? 77? It's not high enough. What the fuck is a panoramic newsletter? Gross. Is that shit still working? Ooh, look at that. Stayed live this whole time? No, it didn't. It died at 10 a.m. Bastard. There it is. It's like the push for a breakout failed. Wow, I really didn't fucking miss anything today. What a shit day. You guys have been trading this? How? There's barely even a gap there. Oh, there's the gap. Gross. Well, that was fun. Oh, nice. No. I made 2 trades and stopped. Yeah, NQ's just grinding higher. It was honestly kind of like from the technicals, it's kind of what I expected for the beginning of this week. Is that bulls are going to try to push as high as they can before FOMC, but it's a slog to like get any ground here. Let's see. Some of the sold puts shifted up. They're selling calls in the money up here. 75, 70, 65. Are those zero DT? Yeah, they are. There's synth shorts at 80 and 85. Small ones, but they're there. Kind of in line with the SPX expected move for today, but not the aggregate one. Yeah, this might be near a top. It's probably like $3, $4 more room on the upside, but not a lot. Is there snow on the road? Those was like some sleet shit. But no snow. Tesla calls. Yeah, it's still pumping. There's still no fucking breadth in the market. 29.62% of the S&P below its 20-day moving average. This is all tech. There's just nothing else driving this. Huh. What do you think about Nvidia here? I mean, I'm short Nvidia. It broke support. Next support's at like 28. If it loses that, it could dump. And at least from a technical side, the options chain too. Losing 30 is really bad. The chain flips pretty bearish at that point. 40 is the real pivot point on Nvidia, but losing 30 is not good. That's like where the last of the bullish support is from the like prior 2 earnings. There's a bunch of sold calls on LRCX above 80 or at 80. And then it's got some bullish positioning from like 80 out to like 86. 80, like 86.90. It'd be nice if it would just break the fucking sold call wall, but most of that sold call wall expires with OPEX, so it's possible that it won't push up above 80 until after OPEX, which is not really a point where I want to keep my calls. Like, I kind of want to get rid of them by OPEX, and then for a pre-OPEX pump, this is kind of shitty. Check up on S&P Services PMI was my take. I don't think it was that good. 58.5. I mean, I guess any improvement, but I think tech was already up. Most of its gains for the day were up before fucking PMI print ever happened. Like Nasdaq's gained another 60 points since the PMI. Also, S&P PMIs are super fucking unreliable. Like the ISM PMIs are pretty accurate. Those showed a decline in services. For pre-OPEX it's not good. I mean, generally speaking, like the Friday prior to SLD and the following the following Monday, Tuesday tend to be pretty bullish, especially into FOMC, like more bullish than this. Like 120 point gain over 2 days. And breath usually picks up because everyone gets excited about the Fed, well, ideally lowering rates into, well, bringing rates down, which benefits small caps. So generally you see breadth, like industrials, materials, finance sector pick up going into the promise of a Fed cut, not drop. And I mean, Dow's down today. IWM's up a little bit, but negligible. Can we see SX tumble into the end of the day? Maybe. I mean, it's moderately supported at like 75. We might see like a test of 60, or maybe fill the gap like 67, and then just bounce back and close somewhere around here. Looks pretty likely. No, my shirt's not coming off into the end of the day. Nice try, though. Hmm. Took my pants off when I got home. Fuck would I wear pants while I'm streaming for? Guys are weird, man. Is it cold? Oh, it's like 60 degrees in here or something. AQN's not going to reverse till yields start to decline. Probably. We're seeing the Gen 5 Vision Pros or Apple to be at $250 a share. I mean, probably, yeah. Yeah, QQQ's going wild. I mean, it's gonna top out soon too. It just has more range than SPX does. It'd be cool if we can get SPX wired up, or SPY and QQQ wired up to live. Out of SMCI, not entirely. I still have a few like leaps on it. I might pick up some more. I know I got delisted, so I might wait a little bit, but as long as they can prove out their fraud through an audit and nothing goes wrong, then can go up more. But I got out of a lot of it. Like the 50, a lot of the 50s I sold. Those bot calls still hanging out, waiting for a rescue. No. All of that like pre-market shit is like it's like a few hundred contracts, right? So the second market opens, all of that bot shit gets crushed out by everybody selling all the tails. Right? They're selling the up and the down. And so those positions just get dwarfed. Can they squeeze the sold calls here? Mm, probably not. Yeah, that seems. I understand that most of the actions being driven by NQ, so but probably not. Like they're not like leveraging up short puts. There's a synth long at spawn at 85. They gotta climb. Uh, like a 20 billion gamma gap to get it up over 85. It'd be hard, or even just to test 85. Any interesting Govy into after OPEX? Kind of. I'm wondering why it squeezed the other day. Liquidity's still really tight on it, which is kind of weird. Like, here, I can show you guys. Like this hold on. This like little purple indicator here. This is just like licks. And we do some stuff to it, but it's just like a liquidity index, right? Oh, look at the historic liquidity. And look what happened after the like the squeeze up the other day. And it's still really really overextended, which is kind of interesting. So we'll see if something could happen there. I don't know. I got a little bit of theta. Fucking calls are like 5 cents. I don't think I'll actually make any money on it, but if I turn $125 into 10 grand, awesome. If I turn it into zero, who cares? Since shorts at 80.85, not since long. Do shares cost same like calls? They're pretty close, yeah. For GoEV? I mean, except you get one share of leverage for a share, and for $5, so you can get what 20. Mm, let's see. You get 41 shares for $5, or you can get leverage on 100 shares. They're pretty fucking close, though. Been AFK for a bit. I was in Japan for vacation. Yeah, you told me you were going there. You're still killing it and making stacks. Doing all right. Last month's been kind of boring, but hasn't been bad. I think my biggest wins this month were SMCI and Google. Google was a weird one. I apologize in advance for my stupidity. Why do you think 6110, 6143 likely? Once again, everything seems topped out. It does. But if they're going to push up and reposition for the next range to the upside, that's where they're going to reposition to, I think. I mean, it's like blue sky, right? It's basically me just guessing where positions are going to roll in. Although I'm frequently right about the next like all-time high level. I mean, it could be different. Like those don't have any basis in like historic data because price has never been that high. So I base it on like the technicals and where I see opportunity for positions to move due to shifts in liquidity in the options chain. And that's usually pretty accurate. I mean, hedge funds and banks and stuff are pretty predictable with their position placing, but sometimes I'm off. The times you've called all-time highs within a buck or two, sometimes just a few ticks on ES. Is there any liquidity right now? To the upside? Not really. I mean, out to like 6,100, it's okay. It's slim, but it's okay. Like, if someone really wanted to pump it, they could throw some money at it and maybe get there. Above 6,100, gross. Yeah, it's very thin. I mean, you saw the delta chart from this morning. There's like fucking no delta to the upside at all. He's God Gorgalina. That's why. You really had any puts for this Friday, or just close it all last week? I mean, I closed it all last week, but I think I have like a couple. I think I have a couple 75s left, 3 or 4 of them, and I don't know. We'll see what VIX does like tomorrow. I'm more interested in what they do with VIX tomorrow. Like if they try to crush out vol into the FOMC meeting. Don't lie. Where do you keep the crystal ball? Well, okay, so I mean, I can kind of explain how I make like. So some traders will use fibs, which are awful and have literally no meaning besides confirmation bias. And fibs will tend to be like, I mean, they're just basically a like pie in the sky guess at where price will end because, again, they have no statistical basis, right? So fibs will usually end up like plus. Where's the fucking? Oh, there it is. Like plus minus $20. So those are garbage. You can throw those out. There's Elliott Wave, which also has no basis in reality. That's usually like plus minus $40. But you know, they change it based on past data every 5 seconds, so it's always 100% accurate now, as long as the price action they predicted has already occurred, which is phenomenal if you think about it. But generally what I do is I take, you know, CTA positioning, which, I mean, most systematic positioning is going to be based off of like standard deviation moves. And, you know, where CTAs are going to be coming into the market is where you're going to see liquidity on the futures. And then I assume like a standard distribution around the CTA's provided liquidity. And, you know, you're going to get like a high and a low, and then I kind of find a mean, and then that's the price projection. So it's not that hard. Chase betting is shilling as LPS. What the fuck is LPSN? Greg spends years of his life making predictions for hedge funds successfully. Pickle jar. How do you know what institutions are doing, Gherk? You can see what they're doing. LPSN is a penny stock. Oh, who cares about it? Why would you buy penny stocks? That's not true. There's a legitimate way of tracking and building penny stock positions that's far more capital intensive than is good for any retail trader. But I do know a few guys that really make bank on penny stocks, like shitloads of money on them. That sounds so degenerate. It is. It's super degenerate. But you know, they do as much to reduce their risk as feasibly possible. They'll like fly out and like meet company executives and stuff like that. And I mean, while there's a ton of fraudulent companies on the OTC, there's a lot of legitimate ones too. And if you can find a legitimate company that isn't, you know, just a vehicle for, you know, defrauding the Department of Defense or something like that, then or the Department of Energy. Those are the big ones. The fuck? Um, you can actually make a shitload of money. You're saying that we should not invest in shrimp? I mean, I will say that company doesn't seem fraudulent. They're just not very well run. Like, they have an idea, but it's like a narrow market, and they're bad at publicity. "100% we shouldn't invest in shrimp." Having said that, shrimp is tasty. I mean, I feel like if they'd had better management, that company probably could have been really successful. There's a big market for what they're trying to sell, but they've been unable to tap it. The only one I knew was short, if you knew before, was FFIE. Went up like 10,000% in 3 days in May. Me and Dork like were looking at FFIE like a year ago because it was doing just some really weird shit. And then yeah, it had a crazy run. I'm not buying out shrimp. I know Farmer does it on a regional level, the shrimp business model, and they make a shitload off of it. I mean, shrimp's value is in the like aquacultural, like the aquaculture systems that they've designed, right? Not in farming shrimp, which is what they're doing, because they don't know how to sell the equipment, right? The value there would be in selling the equipment, which is not their current business model. They're just trying to like regionally sell shrimp to people, which is terrible when you could just sell the equipment and let other people take on all the risk of actually farming fucking shrimp. And they've developed a proprietary platform for like creating organic free range shrimp that are disease free, which sushi chefs all over the country would buy at whatever price they wanted to sell them at. Yeah, the restaurants want the better quality shrimp because the Vietnamese like farm shrimp and the Gulf shrimp are disgusting. Is NQ ever gonna stop? I don't know. Gamma Max on QQQ is like 5534. So it's about $4 above Gamma Max right now. But QQQ is not an index, it's an ETF, so but yeah, that's kind of crazy. Vega neutral on it is at 551. I don't think I've ever seen QQQ break Gamma Max for more than like a single day. At least back into 2022, it's never broken out above Gamma Max for more than a day. Can you take a quick look at root? Yeah, my target was 70. It's still kind of it's just sitting at 75 right now. There's a little bit of support here. If you haven't taken any profits, I mean, consider that. It could very well find support around 70. But my target or 75, but my target's still 70. What's up, Nuke? Ooh. Hold on one second. All right. Oh yeah. We're doing refresh, hard refresh. Mm, okay. Question. Um, why? Okay, I'll ask you in DMs. I think I did that already twice. Maybe I need to log out. Nope, still the same thing. Even Shift F5. Oh, son of a bitch. Yeah, let me log out. I'll try logging out. Sometimes that fixes that. Nope. Yet another epic stream card. It was pretty awesome. Fitting too, because I had to get a ride home from Northern Jersey yesterday. Dork, I went to a supper, like a proper supper, and I shilled our product. What the fuck is that? It was like some fucking 500 or $700 a plate dinner in Westchester, somebody's mansion. I don't know who the guy was. Nice house. AKA shilled me. I know this super autistic guy. I didn't pay for it. I was a +1. Was the $700 a plate quality food? Eh, it was okay. Like, better than most wedding caterers. But very like filet mignon with a demi glaze and over buttered potatoes. I don't like pictures, Maeve. Despite streaming myself 8 hours a day for most of the year, I don't like photos. You can over butter a potato, yes. Photos steal your soul. Live streaming just shares it temporarily. Exactly. Puddin' Flops gets it. Yeah, it is fucking annoying, Nick. Well, no one wants to buy anything else, so what else are we going to pump the market on besides tech? Okay. I'm going to go to another tab and then hard refresh that tab and then go back. Nope, that doesn't work. Yeah, I did that. Hmm. Ooh. a short here? I kind of do. Um, Until we start a Build-A-Bear company, but for stuffed pickles. Get someone to make you a bunch of like pickle sheaths, and then buy one of those machines that just shoots fluff into stuff. It's like a cotton candy machine, but for polyester. Maybe it's just a cotton candy machine. Anybody else find the move up in vol today really strange? Given that none of the short calls got squeezed off? Maybe still de-risking on the short put side? Hmm. Test at 75 would be cool. $3. Not bad. The 60-80 strike is kind of turning into a synth long slowly. But the 75, 70, 65 calls are still sold. They haven't squeezed off, which is interesting. Meaning they're holding on to at least some expectation that they'll go back in the money. I don't think I do, but let me double check. VIX is actually down. Well, no, it's not. VVIX. Oh, okay. There can't be any advantage to selling these at this point. They're like $1. It's 140 right now. Jimmy related info to share these days. I don't know. It looked like shit at the end of last week. Still looks like shit. Selling calls at Gamma Max has been a wildly successful trade. Netting out. The volume's kind of high. Maybe we're getting some short puts closing to the downside. A little bit of profit taking. Minimal. It'd be a good time for a rug, but we need to lose like 78. Probably. Yeah. Let's test a 75, some like 60 billion in gamma falls off. Yeah, Reddit could probably reach 200. Yeah, I can. Is it smarter to buy shares or calls in hopes of Reddit testing 200? I mean, it depends on how much leverage you want. This feels like it's gonna take a while to distribute out. Hmm. Would a rate cut be considered bearish? They have been so far. Ooh, that's too fast. Well, the bond market doesn't like them because the fucking effective federal, like the the real rate is the federal funds rate minus the CPI. The CPI is 2.7%. So right now, we're sitting just at like 2.05, which is the long run neutral rate, right? Well, the Fed's assumed long run neutral rate. So if they cut again, we're going to go down to like 185. 185, 175. And the bond market doesn't like this shit because they think inflation is going up, which is exacerbating the Fed's cuts. Right, so the Fed started cutting at, 2.5 or 2.3, and now inflation's up 4 points, which is effectively another 4 point cut, or 40 cuts, right? They've already cut 75 in this cycle, maybe 100 by Wednesday. Is it fair to call it a rate cut when rates go up? It's because the bond market doesn't agree. And the Fed's ceding what little control they had over the top end of the curve by doing this. They probably will cut. I'm not fighting the Fed. The Fed's just hitting themselves. It's funny because the Fed is fighting the Fed. Yeah. Realtors across the country in shambles. Must be a lot of people really pissed off who were told rates were going to come down and now they're going up. I can only imagine the number of realtors that were like, "Oh, the Fed's going to start cutting rates soon, so these rates will be refinanceable in 6 months, 12 months," and then the Fed finally cuts rates and rates go up higher than before. I think things will get cheaper, yeah, because the cost of finance is getting super high. The real estate market takes a very long time to crash. But I would say that it's probably already crashing. In some regions it's still crashing upwards, but that's not true everywhere. Definitely crashing in Texas, Florida, yeah. Little by little. But that'll spread. That same effect will move further out. Real estate markets now, and this is actually very different from 2008. They're all intrinsically tied together nowadays because of Redfin and Zillow. And by creating a essentially an exchange for real estate, which is what Zillow and Redfin are, you're going to create volatility in the underlying asset that is being traded on that exchange. What happens when investors start dumping entire neighborhoods at 50 to 10K markdown or Airbnb bros? It all collapses. I mean, realistically, that's what's going to happen. We go from supply crunch to oversupply very rapidly. It's still gonna be a fortune to finance a house, even if it's fucking like, say the average home price in the U.S. falls from whatever it is, like 450K right now, back down to like 200, 250, which is probably a far fairer value. Um, it'll still be difficult to finance those. Credit requirements will go up as financial conditions tighten because they're not going to trust people to take on the risk of the loan. And then the yields are going to go up, which is going to raise the rates. I mean, conditions don't really favor cash buyers now. They won't favor cash buyers then either. Maybe a little more, but not much. Well, there's a sweet spot between where rates start to dive and housing prices are still cheap. But that could be a year, it could be 3 years. You definitely want to see some modulation in long term rates, though, before you before you buy before I would even consider buying something. And not this like, oh, rates went down for 10 days bullshit, like an actual like long run period of rates continuously falling. I mean, still, if you're gonna buy a house at fucking 8% interest, it's much better to buy one that's, you know, half the price. I mean, yeah, you're okay at 2.6%. That's amazing. Here's the problem is that the housing prices were still very high. So even if you have a low rate on your home, you probably need to main. So the housing prices were already high pre-pandemic, right? So even if you have, you know, 2.5 or 3% on a loan, you probably still overpaid for your home by, you know, 20-30%. And then all of this just got way worse following the pandemic, right? Now you're overpaying on a house by like 50-60% on average. And, you know, you're financing at 6.5 to 8%. So yeah, you're in a better position, but I'm sure like how long could you keep your house if you lost your job today? I have no job. Must be nice. Today I learned I can't pay property tax. Like you don't know how? I have two hands and a strong grip. I can always make $5. Well, as long as your mortgage is $5, then that works. Have you checked out Ionic lately? No. Quantum computing hype. It's at all-time highs. I can't deal with another leg of this bubble. Just because Google synthetically made a qubit. Two hands can make 20. That's 85 to 100 an hour. I mean, yeah, but you have to have the customer base. I don't want you to jerk me off, Bob. Actually, I've never seen your tits. How are they? How do you determine how much of your port you want to allocate between dividends, long-term investments, and wheeling stocks? Dividends and long-term investments are generally kind of the same basket of shit. As far as wheeling goes, I mean, generally, whatever. Usually, people who wheel, the vast majority of people who wheel, are looking to buy something at a cheaper price. And so they're selling the CSP hoping for assignment eventually, but hoping for assignment at the price they're selling the CSP at. No one profit taking. There's a little bit of profit taking. But yeah, they're trying to support the 80 level. I mean, they don't want Gamma to slip negative on them because they don't have a lot of downside support if it does. But any break of 78 to the downside, or where I have that line, that like 77 mark, that could be pretty bad. Even if bulls don't take profit, there's still some exhaustion that occurs. MQ found a few buyers at 22.1. That may not be very durable, though. There's no BRICS catastrophe. Just making shit up. Yeah, well, Bitcoin's already made up, so why not? Hmm. It is a head and shoulders, and it's already breaking down. It's not an FSLR strangle into FOMC. I don't think FSLR is down because of the Fed. I mean, yeah, cost of finance is up, which hurts their business model. But I think it's more that nobody expects the incoming administration to lean into clean energy at all. And they rely a lot on government subsidization. I sold some Apple calls last week. I might sell some more. Hmm. NQ is still selling off. Yeah, the 2100 level on NQ looks kind of interesting. NQ drove this entire run to the upside, so if it fails, that's going to be far more important than whatever's going on fucking S&P. Irony is the Green Revolution died because the major power distributor manufacturers won't scale up to meet demand. Lead times on critical gear is 2+ years because they're massively in debt, and an infrastructure shift right now would mean paying rates at like 5 to 6% over the next 30 years in order to get the financing they need for the infrastructure scale out. How high can MU run if they beat? It's just a fucking earnings play. I would say, based on the positioning right now, post earnings, it could jump to like 108 or fall to 95. Market makers pricing in 5% for one day, 13.3% into the end of the week. IV 30s, like pretty close to historic highs. Hmm. I sold Apple for last week. I'm probably gonna sell more for this week, like end of this week. I mean, because that's where banks are lending, right? They're lending at like the 10, 20, 30-year rates. Hmm. It's boring. I don't get stuck over holding these. Huh. All right. Indication of swings of momentum here. Not really. Kind of ground down to a standstill there at spot. It still looks pretty good. Hmm. The new 30-minute candle line could need drop 10 points before Mama Pompey's Crazy Town. Well, I mean, a little bit of support at 2100, but wasn't very strong. Kind of a weak bounce. There's still no breadth. Fucking even an NQ performance is all relegated to just like one part of the basket. Like look at wait, what is that? Nvidia's down 2.31. QCOM, ARM, Cisco down. ABGO's doing okay, and Apple's steady. But most of the tech services are kind of meh. Consumer services are down. Transportation, process industries, energy. And then if you look at the if you look at the S&P, nothing's particularly great. Like the number of companies outperforming the index today, not a shitload. Quite a lot of companies underperforming the index, though. Mm. I'm trying to get this fucking website to work. Greg, what's dispersion? Um, I mean, just in relation to like indexes and their underlying. This is today's performance for like most of the S&P. It's pretty shit. Well, not everything is red. Just 70% of the things are red. But only like 20% of the things in tech are red. So generally speaking, the implied volatility of underlying assets is greater than the implied volatility of indexes. That's what dispersion traders are trying to capture, the spread there. So you short vol here, long vol here. Let me look. No problem. I mean, that's a really basic idea of the concept. But you're basically betting that the correlation declines, right? So, you're expecting implied vol on the underlying to go up. And implied vol on the index to decline. And as that correlation moves down, you make more and more money on the spread. It's like a really high risk, high reward strategy, but it's also well diversified. It's not really something that you can do effectively as a retail trader because it requires extraordinarily complex execution, and in order to remain unexposed to delta, you need, real-time hedging algorithms in place. But I mean, and sometimes it can get blown up due to, things like liquidity or spikes in volatility, like very sudden collapses in correlation, which we've seen in the past, right? Like correlation can collapse very quickly. When would you close them? Wait for Delta to move towards 1. Positions paid, it's just about maxing. Yeah, you could do that. I mean, I don't know how much more money you're going to make as Delta moves towards 1. And you obviously take the risk of the stock turning around. So I would probably just take profits right away because it's not a very like long dated position. If you have a really long dated position, then you can sell spreads against it like calendars and stuff, and continue to reap a yield on your already profitable position. I just want to know when others are doing it. Well, that's why we watch the core 1 month and core 3 month indexes because we want to watch those shifts in correlation. That trade gains momentum and gets stronger as correlation declines, right? And so, is correlation declining? Is correlation declining on what time frames is also really important. Sometimes you have a lot of interest in near term dispersion, like less than 30 to 30 days. And then sometimes, the interest is in further dated dispersion. So, looking at where market participants broadly expect dispersion to move over time is a really important factor. Like right before we took a dive following the election, there was a period where 3 month correlation was moving up, but 1 month correlation was kind of trending down flat. So there was still a lot of near term expectations for dispersion to continue, like that spread to continue to widen, but the longer dated supportive positioning started to pull back, and then that caused this to rapidly catch up because basically this got blown out because it no longer had the support from the longer dated positioning. Ooh, that's a more interesting failure on NQ. A little bit of volume behind it. Man, NQ is just really outperforming the SPX. It's pretty neat. Yeah, yeah. And then you've got bears will be hunting for something like that, right? Like when the spread between the near and the long term correlation starts to break apart, and you have disagreement. The longer dated positionings they're stronger. And so as their positioning breaks down and they close out and exit, then that starts to impact the short vol or the long vol on like the shorter time frames. I'd like to think I don't do a lot of prowling, Grim too. Not a big prowler, you know. Speaking of which, so I kind of built this as a way to look at divergence in well, hold on. Let me move it into its own little window. So I kind of built this as a way to look at divergence between core 1 and 3 month over like a however big a window. Like if you go out to like the 1 hour. And you can see here as the market dipped over the last couple of days, we started to get quite a lot of divergence, right? Now, we didn't get a big move in correlation, but we got a big divergence in correlation. And sometimes, like back in August, both near and short term are very much in agreement. You don't see a lot of divergence. And then, the market falls, but everyone's on the same page that, shit's going down. I wonder what'll win here. Theta Decay or the $80 strike. I've started the journey of girth maxing. Wait, is that thing where you like use the meat tenderizer and just pound your wiener until it's flat? Ooh, excellent advice. Okay. I've been told that tomorrow the market is expecting an interest rate cut. Well, I hope not, because the meeting is on Wednesday. What impact are we expecting on the market? Well, since inflation is still rising, I would expect the bond market to react negatively to Powell's decision to cut rates, should he decide to cut rates. And we'll likely see yields at the top end of the yield curve move up further, while yields at the short end of the yield curve move down, which is known as a bear steepener. And encourages the selling of equities and the buying of bonds. The more it steepens, it's still in the very early stages of that, but the forward yield on bonds already surpasses the forward yield of earnings yield of the S&P 500. And if financial conditions continue to tighten, then the forward earnings yield of the S&P 500 will continue to decline while bonds rise. And eventually, you're going to reach a point at which the attractiveness of bonds is greater than the attractiveness of equities, and then people will sell equities to buy bonds. It takes some time. It's not like an overnight event, but it is probably moderately concerning if you're, an average person looking to buy anything on credit, like a home or a car. It sounds pretty bearish. I mean, yeah, it does. But that's what's happening. I mean, the bond market. Nobody wants to buy U.S. debt at fucking 4%. Not for 10 years. So by cutting rates with rising inflation, a confirmed rise in inflation, Powell is handicapping the Treasury's ability to continue to implement YCC by issuing shorter dated bonds to tamp down unexpected moves in the top end of the yield curve. And he's also kind of just telling the banks to go fuck themselves on their hold to maturity losses. Hedging it with foreign equity holdings. So wait, that's not a hedge. It's just the same. You're just making two of the same trade. Zero beta hedge. I like it. Are we finally breaking 78 to the downside? One can dream. I mean, NQ has further to fall now than it did at our prior low test, so it's possible that the sell-off in NQ could drive us through the supportive sold puts at 80, and we could push into some of the short puts to the downside, which would be cool as fuck, obviously. I think it would be racist if I assumed that China can Ponzi the market the way the USA has. They can't. Their ability to do that's been crippled. China's just the USA now. That's all we did. That's what we forced on them. By holding rates higher for as long as we did, we just handicapped their ability to do anything but continue to buy US treasuries, which means they're in the same boat with us. Their fate tied to ours, no matter how much they wanted to resist it. Which economically is a genius move. As long as someone doesn't come in and fuck it all up. Who would that be? Give you one guess. China has no assets to back the Ponzi. There's nothing to pump, man. Their banking system's 10 times more fucked than ours. The entire country has lost like 50% of its equity on its real estate holdings, which continues to slip. You're gonna go buy a Chinese 10-year at fucking 2% when you can get a US 10-year at 4.5? I mean, it's not great. It's atrocious. Poobie over here simping on Z. Yeah, well, he did that before, and he caught the, I think he caught the rip when they were like, oh, we're gonna fix everything, and we're gonna open up some liquidity, some liquidity facilities, which they then closed like 10 days later. Because they're like, whoa, 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 we can't buy all these fucking dollars. Old man diaper in the White House and this regarded super billionaire butt buddy. Yeah. I mean, it really makes no difference who's in office, to be honest. None of them have any fucking clue what's going on. I loved the financial literacy question about Congress they posed to Powell. That was fucking great. As big as China is, they also have like 800 million people living in poverty. That's 2.5 times the entire population of the US. Yeah, but their poverty has like a better quality of life than ours. Thanks for the girth maxing advice. No problem, Dork. Sounds like a strong labor force. What, a bunch of starving Chinese people? In like rural Canton? Where there's no fucking factories? No. Incentive. China has a long history of just starving half its population to death. That's how they fix the economy. Disinflationary. They're already in a debt spiral. They don't want more deflation. Everyone knows, man. No one's bullish on China. You know who's raising rates? Brazil. Just saying. Ra's al Ghul from Batman. Is that good for PBR? Eh. Oh, those foreign mutual funds have SA holdings too. Nice. Much better than Chinese. Although they're overexposed to China.
VWAP's handler put their pickle in my jar. Correlation causation divergence apothecary. Am I doing this right? Deflation inflation interest rates Gherkin. Cheers. 3.
Perfect. What a stupid bounce. Did we fill the upside gap? Yeah. Call sellers don't seem to be too bothered by all this. Maybe I should sell some calls. Even if I'm like long pets. Tricky. Uh, You want to know my favorite thing about the pickle jar? It's that Dork liked me in the beginning, and now I'm the absolute bane of his existence. I don't think Dork dislikes you. Otherwise, he'd time you out like he does Bob. DMs. Yeah, the call premium's nice and high. Premium's really low today, though. Like, usually note that. Very low for the average. What the fuck? Stop calling me. He dislike. I don't think he dislikes me. It's just hates everything I say. Well, that's because you've chosen you've chosen to argue points that you know are mostly untrue. 1 second. What the actual fuck? Jesus fucking Christ. You're seeing the 60-80 roll over to net long now? No, kind of the opposite. Call sellers getting getting antsy. Oh, the 80? The 80 has been that long for a while. Like an hour and a half. The 85 is getting sold pretty heavily right now. So is the 90 on the call side. What's the next hour look like? Maybe slow grind down and a close right where we are. I don't know. Maybe we could close lower, but it doesn't look super likely right now. Not unless short puts start to pull back. It's hard to tell though, because there's no liquidity on the SPX and everything's being driven by NQ. Speaking from the MM side. Yeah, I mean it's net bot calls at 80, but it has been for a while. So MM's net short calls at 80. MM wants to close under 80. I don't think they'd hate it. Yeah, probably around like 70 or 74 would be a preferred close for the MM. Somewhere in there. 72. That's where they'd make the most money. I think there's a chance for us to slip the collar again on retail sales. If retail sales have been falling for the last 2 months, if retail sales fall into November, that's bad fucking news. So we could end up in the like 60-30, 60-50 range going into FOMC. Or maybe, I mean, they'd have to break the collar intraday, which is kind of hard. They haven't been able to do that for like a week. But possibly like retail sales is bad tomorrow. We dump a little, maybe test like 60-40, then come back up. Then they push back through the collar end of day before FOMC, or they push through the collar overnight going into Wednesday. We'll have to see what retail sales in Redbook look like, but Redbook's not looked good for the last couple of weeks. You checking up to Friday or just zero DTE? For which? 60-80? Both. I can tell you the difference in the spread between them, I guess. So it's like 1,600 net long calls total. With, yeah, actually, they're all zero DTE. All 1,605 of them. So the MM's net short those calls. They're net long puts at the same strike, 3,164 of them. So, I mean, if there's a synth long, which there is at 80, the MM is synth short. Yeah, They're sending this to 6100 end of day, then to tomorrow to 6250. No, they're not. None of that's happening. It's ridiculous. We have an expected move of like 24 points today, which we've already exceeded. I think SPX, like the AM contract, was like 45 points, which we've also exceeded. So you could expect the MM just to try to pare things back at this point and recover their losses from mispricing the options this morning. $6,000 end of year was ridiculous in late October. No, it wasn't. It was literally the target. Is a large beat still quite possible for retail sales? I mean they're different surveys. So yeah. I keep getting friends requests from a Gherkin on and off. That's fake. I can tell you right now, it's not me. People are using payday loans and shit to keep buying stuff they don't need to feel better. Yeah. But people have been doing that for 2 years. Some of them are quite in debt on their subprime loans and defaulting. I know that. Wait, are you defaulting? Did you get like a fancy rice cooker and finance it with a firm? I got a fake friend request the other day too. They didn't even filter out mods to try and scam. It's silly spray and pray for the scams. I mean, I can get rid of them by making the Discord private. Cornish honor better access only. Maybe I should. Fuck people who don't want to pay anything. And we gotta moderate them. What a waste of time. Maybe it is time. I'm tired of fake Gherks. It's not that I don't want to pay. I know, it's that you just blow up your port every day on NQ. They're selling the fuck out of the 75 right now. We get over leveraged on these. Let's do it. Hmm. One sec. Oh shit, I just got a Christmas pickle. Oh, it's green. Yeah. Fuck. That doesn't work. Christmas pickle. Where is a necklace? That's weird. Breathing intensifies. Who gave that to you? Neighbor? I like its hat. No, I don't think so. They just know about, like, I think Christmas pickles are a thing. Like, completely separate from the stream. Hide the pickle's a real thing. What? And Christmas pickles are a thing. It was like all over Reddit like last year or something. I was talking about pickle ornaments at my Cairo the other day. It is a thing. See? Also, don't go to those quacks. They're not medical professionals, Bert Stew. Anybody else remember the old Reddit post where the guy made his wife a Christmas calendar of his dick and little costumes? No, but I mean, that guy's a genius. If she keeps that on her desk at work, free dick advertising, right? And it's not easy to advertise your dick. So, winning. No, I'm not getting a VR camera. Unless you're Hunter Biden. Yeah, that's true. Well, he had someone else do it for him. That's how it works. You can't advertise your own dick. It has to be like there's ways to do it, but you have to use the transitive property. Yeah, yeah, dick referrals. Your spine was already aligned, Bert. God damn it. Saying chiropractors are witch doctors is accurate and also insulting to voodoo practitioners. Yeah, I know. I didn't call them witch doctors. I said they weren't medical professionals. Remember that guy that used to be in here that was a chiropractor? I wonder what happened to him. He got his medical license and became a real doctor. No, he didn't. Did you get a PhD so you could be referred to as Dr. Pickle? I mean, that would be the only reason I would want to get a PhD. I've got a PhD. In what? It's been a long time since I commented on here, but I just want to say that I made my first 100K of profit using your advice over the last year, playing extremely conservatively. Fucking awesome. Well done, Cat. Yeah, it has been a while. If the US dollar goes sub 100, how's Bitcoin gonna do? Same thing. Just get a New York State ordination so we can legitimately call you Father Pickle. I don't want to pay. I don't want to pay the overhead to franchise any specific religion. What is going on here? Who? Who's Liam? The video caught a bounce. Ooh, should I go long the video? No, not yet. Hmm. MQ tapped 21, 22, 150. Hmm. Dealer still wants this at like 75-ish, 74. Call premiums of 739 million. Put premiums at 581 million. Can you tell Larry to stop selling the 75 call? Selling the fuck out of it. What, like an hour, 50 minutes till close? That's the test of the upper side of the consolidation for SPX and the 60-90 test on ES, which it has failed the last two times we tested it. I wonder if it'll fail here. Hmm. Dollars dropping. Yields are mixed. Hmm. RSP's still down 11 points today. Well, it looks like it's failing even more. Did Dow come in with anything? Dow's just flat, zero. Russell's got a little bit of juice. Hmm. Don't think that's supportive even. Put premiums picking up a little bit here. 751 million in call premium. Still just a bit shy of the peak for gamma for today. The video over 133 get fun? Not really 133. But I don't like any of the NVIDIA gamma under 140. Over 140 it's kind of fun. Maybe like 136. It starts to kind of creep out from the bearish positioning. Yeah, like 136, 137, right around there. And if we're gonna get downs this week, it's definitely not gonna be until after FOMC, or at least any significant ones. Should mark all the levels on this. Let's see. What's the other one? 60, 64.75. Wait, what the fuck? Hmm. Ooh, some short puts are profit taking here. Just a few. 75 strike, 70 strike. Hmm. Yeah, not many. Overnight session is probably gonna be pretty boring until later this week. Then too. Actually, I think the overnight sessions are gonna stay interesting because of our proximity to the collar. So, like, if retail sales misses in the morning, we'll probably lose the collar in the pre-market and switch the trading range to the lower side of the collar for tomorrow. And then they'll probably try to get back over the collar going into FOMC. It's much better to pull back short vol positions here than it is under the collar because you kind of rug pull yourself if you're under the collar. 1 second. Dude, what the fuck is with this price action? What's tomorrow look like? Hmm. Synth short at 80. Long calls at 85.90. Short calls at 80, 75, 70. Interesting. So someone's just straddling spot at 80. Hmm. Ooh, vol. Ooh. Short vol bounce failed. If that synth long at 80 slips out of the money, we could get some fun stuff here in the last 30 minutes, 25 minutes. Mm-hmm. Test failed. Ooh, this is fucking spicy. The bottom's already fallen out. NQ to fail the retest of the trend. And then lose the, like, the EMA 30 here. Back to 21. That would be cool. $97 billion gamma at spot drops to 16 billion on a test of 75. Negative 12 billion on a test of 70. It's actually quite a lot of room on a failure here. Could go maybe as low as 71. That'd be nuts. There's not enough time for that, probably. They were pulling back on that short ball pretty quick, though. The change of venue is dismissed for Fubo. That's good for them. SPX losing the synthetic long support a little bit. Needs to slip further, but it's getting close to slipping it completely. And then remember, gamma falls deeply negative right to the downside of the synth long. So it pushes price away from spot as it slips. Because the MM's net short the calls. I'm selling puts further out or pulling them back. A little bit of both. Bit of a struggle. If this gets back above like 75 cents and holds, it's gonna reprice. I wonder where they squeeze. 75 or $1.05. NQ lower high. Ooh. Oh, there's a big spike in vol. Go time? Ooh, shit. Nice. That's probably support there. Ooh, should I play the out of the money at the 80 strike? If they try to bounce this off their sold puts? Oh man, the calls are expensive as fuck. Holy shit. Never mind. Fuck that. I'm not paying 70 cents for this. 392% on the 60 ADP there. I love you, man. It's good stuff. It's about to be more. Didn't have time to chase. The contracts were 15 cents. What was the chase? They went up like 23x. It's such a low risk reward. Yeah, I was. I think I made. What did I make on them? What did I have? I had the 75 put. Oh wait, that's the call. Like 1900 plus 1900, so 3x. That's what happens when you sell too many puts. Now is the bounce worth it? 12 minutes? They're still overpriced. It's like $40 for an 80 call. I don't want it. It'll probably go up like 155 or something like that, but it's risky. Someone's getting fired. Maybe. Still to 273. Nice. We have 570% on the 60/75. Cool. They were pretty fucking cheap. The cool thing about this is, like they don't always hit, right? Sometimes the bulls just sell. They just sell hard enough to stabilize the loss of their position into the end of the day. But fuck, when they do hit, they're so awesome. Well, the point is, you don't have to full port on them. You can just like throw like $1,000 at it or something, and it's like a really decent return. Damn. Okay, this is actually starting to squeeze out the short puts to the downside and to close. They might not be able to catch the freight train. I knew those calls were overpriced. If they lose all the positive gamma, this goes back to like 770. Well, yeah, I mean, kind of right where we're at. 65 is pretty flat though, so the momentum could carry it down one more strike even. That'd be kind of nuts. But this was kind of as low as I would have expected it to get. But yeah, there's a little bit of juice on the back of this, and if it keeps squeezing out like, well, basically if the short puts at 65 get scared and start closing, then I can just ramp down another strike. Getting shaken out. Ooh, that's actually a decent number of fails. Interesting. More interested in the ETF fails. Those are quite high on one too. 1.454. We'll get some Ooh, shit. I'm profitable on LRCX. Finally. Do I want to close this shit? Just walk away with my $12? No. How's it doing? What's going on with that right now? Clearly Vol's turning up. Was it breaking out? Maybe some of the short calls are pulling back before OPEX. Or before the Fed decision? Looks really close to breaking out. I guess that's the daily. Look at like the 1 hour. Oh, it almost did today. Hmm. Close. Gamma Max on Hood and GME. Let's see. Looks like Gamma Max on GME is at 30.77. Hood 39.68. DN on GME moved up to like $20. Downside support to 25 on GME is starting to weaken, but there's still some calls at 29 and 30. So it could kind of bounce around here, but if it loses 28, it's gonna probably drop to 25 or 24. Nope. Bull's trying to save it in the last couple seconds. Five minutes. Ooh, maybe. Big profit taking on the put side. Well, I made a modest 100% limit sell. Just finished bringing my fifth paper trade account from 2K to 10K. How many times do I have to do it before the wife lets me in again? But OnlyFans might happen soon. Awesome. Then you're self-funded, right? I think you should go with like a cowboy motif. Maybe get some assless chaps. Cowboy, link, please. Hold on, hold on. How low can we go if retail sales are bad tomorrow? Could we touch 60.25? If we slip the collars, I would say 60.35, 60.40 would probably be the lower range. I mean, yeah, momentum could extend it out a bit more, but I'd be less confident in a test at 25. 25 starts to slip like the longer dated supportive positioning, which I don't think the bulls are going to give up before FOMC. Even if it did touch 25, it would quickly revert back. I ate a bag of freeze-dried sour Skittles, Chris. I have like 3 sores under my tongue. 10 out of 10 would recommend never to eat sour Skittles. Have you considered just not eating them from a hooker? Probably fewer mouth sores that way. How could I not? Exactly. Are retail sales estimates easy targets there? It seems like seasonally retail sales would be better now. They better fucking be, right? That's the deal with the retail sales. Retail sales are declining over the last 2 months. If they decline again into November, that's like doom for US. Yeah. That's really fucking bad. I wish Bulls would pump this in the last minute to 81. Stop being little bitches. Maybe I should have just bought the 70 call. Like the in the money call. Hmm. Ding ding. Well, they tried for 75. They didn't even get 75. That puts them on the downside of tomorrow's puts. Alright, well that was fun. What a fun end of day. I love sitting here for fucking 6 hours or whatever for one trade. God, I miss volatility. Alright, let's see what's going on. What is this? GME? No one cares. What do we got going on here? Where's my wiener? There we go. Still looks like we could see a little bit more upside this week. I kind of drew my dot plot for my week's expectation, so a little up into the week. I know we didn't have a stream yesterday, so like a little up into the week and then kind of flat out into FOMC and then down. We'll see how that goes. But I think the end of week can be pretty bearish, especially if Japan raises rates or JPOW cuts and Japan raises. Although I'm very interested in what happens if JPOW doesn't cut and Japan raises. That's a scenario that could be kind of neat. What? What are you just frowny facing about? Why this spike on GME? It's just like volatility. It's just jumping from one strike to the next. It's a $1.40 move. It's not like there's just like a pile of gamma here and a pile of gamma here, and the price is just bouncing between them, and it's been doing that for like fucking 2 weeks now. It's not like a thing. Everyone's trying to make a thing of it. They're not even big piles of gamma. There's just nowhere else for the price to go. Either the hedges up or they hedge down. It was sudden. Well, yeah, because it's illiquid as fuck in between the two strikes. That drives volatility. I feel like you should know all of this. Anyway, ES rejected on the test of 6090 after taking the entirety of the day to climb up to it. It did get a little bit of a foothold here end of day at the like trend there. We'll see if it holds overnight. If the trend doesn't hold overnight, is that better? It's still a little off. Hold on. I gotta make sure these are lined up properly. There we go. If that trend fails, then back to the 65 test. 65 test fails, which we tested this morning. That's about the collar. Then we slip under the collar back into the downtrend, which would mean this is a failed breakout, which technically it already is, but we still need to see that trend fail to confirm that the breakout has failed. It took all fucking day, but very similar to the breakouts last week that went above trend. Back here, right? This also failed. Um, so yeah, I mean, not very, probably not very significant until it does fail, but we'll keep an eye on that. And then that obviously opens a lower low test should it fail. Which would bring us below the 60.35 mark, and it's starting to grind away at this bullish positioning, but still very, very far from actually being bearish in any significant way. So, not yet a breakdown, right? We still want that 60.35 level to confirm, and really 6,000. Loss of 6,000 would really solidify this being a top. Right, and then we could actually look down for a continuation, towards like 58.75, 57.33. So still a long way to go. Obviously, this is not a step in the right direction, up 38 points for the day, but we'll see. Still very weak. Not a lot of buyers. Yields continued up through most of the day. They pulled back a little bit as we moved towards close after about 11:30. But 30-year, 5-year still higher. Dollar down actually on the day. Lost quite a bit of ground to the sterling, but still making big gains on the yen as that trade continues to be levered up in a way that really speaks to the confidence of no rate cut for December. Which I'm not entirely sure Yuta won't cut rates. I mean, I think there's a good chance he won't, but he could surprise everyone. Um, Oil down for the day, gold, silver, copper, looks like materials and agriculture. Hold on, I gotta pull this up. It's not loading. Yeah, nothing really notable, but a small drop. Looks in line with the data out of China as well. But oil's still holding above 70 a barrel, which is interesting. It hasn't fallen back below 70 as quickly as we've seen in the past. Um, Starting to see a bit more of a spread on that 1 month correlation catching up with the 3 month correlation. Now, if we see a breakdown in dispersion, the first signal of that is going to be the 1 month core, right? Rising over greater than 3 month core. It usually takes a while for the longer term positioning to catch up. And so if you look back at like November's breakdown, or we go even further back and look at like August, the bigger breakdowns this year, you can see that at one point, eventually, that core 1 month starts to move up far more rapidly. And generally throughout the drop will exceed. Now this one was very much an agreement. 3 and 1 month broke down pretty much at the same rate, but they aren't always. Like if you look at September's breakdown, core 1 month moved way ahead of 3 month in the initial part of the downside move. Um, and the same here following the election, that like 2% move down. So yeah, keep an eye on that. You probably won't get a chance to trade it, but it can, if core 1 month rises over 3 month by a significant margin, it's very likely that you'll see a continuation of downside and can be like a good like chase signal. Leverage on the carry back at 8.42%. Almost as high as it was back in November before it started to break down with fears of a Japanese rate cut. So all of those fears that started to reduce leverage apparently gone, and leverage is back up on the carry, and more importantly, we're getting really close to like the all-time highs, which is around 9x. It doesn't seem they can lever much over like 9x. I think the highest we've ever seen it go is like 9.04. And that was like peak bull for this year. Even if you go back to like 2008, I think leverage never got over 9%, or well, 9x, 900%. Yeah, like just before the '08 crash, it just barely tested 9x. And now it's like there for fucking just all the time. So it's even more significantly over levered than it's ever been historically. Um, Bond vol still not really rising. Maybe if we start to see a move in 3 month correlation, we'll start to see a little bit stronger move in bond vol, but we probably won't see anything really big in bonds until after the FOMC decision this week. Skew continues to move back up towards all-time highs. Still nobody hedging their tail risk, and 29% of the S&P. This is fucking crazy, right? 29% of the S&P above its 20-day moving average. So the entirety of this upside move, like basically everything over 6,000 SPX, is purely driven by NQ. Like the SPX itself is actually selling off. It's some of the most oversold it's been this entire year. Did it improve, Bob? I don't think so. RSP is down 33 points on the day, which means it's just worse today. Yeah. So someone's dumping all their bags, but there's a lot of bulls running around, which is really weird, right? When 70% of the index is selling off, but we're at all-time highs. I keep telling you guys about this because it's a really really important signal. Anyway, VX 16.6, up a little bit on the day. We saw a little bit of a climb in VIX too, and VIX 3 month moving up as well. So we're starting to see some interest. Well, at least some risk off in short vol, but maybe some interest picking up in long vol on the indexes, which correlation kind of points to as well. Fed fund futures pricing in just the one rate cut basically now for 2025, and they're expected to get this rate cut Wednesday, which will bring the federal funds rate to 4.25 to 5. and the real rate to what is that? What's CPI again? It's like 2.7. So it brings real rates down to 1.55 to 8. Fuck. That's going to tighten financial conditions a lot. 10-year, 2-year spread continues to climb over time. Since our last re-inversion on December 6th, we've moved up to, what are we at, positive 14.8%. This is usually about as positive as this spread gets. If we see it get more positive, that's going to be extraordinarily bearish. I would say, you know, like this was the COVID crash, right? So that break point right above us here at like a 22 point spread. Anything above that's deeply concerning. Um, and the top end of the curve very likely to just kind of run away at that point. We're pretty close to it. We're only about 5% off. So something to think about. On the technical side, we tested the top of the consolidation that I drew this morning. Rejected. That might continue to fail. This is kind of forming a bull flag, actually, though a bull pennant. Odds of this breaking down are like 50-50. They're slightly skewed to the bullish side to break up, but very little. Um, and a breakdown is actually quite bearish. So we'll see how that plays out. The next downside target would be like 59.85 ish support level, especially at a loss of 60.30. That's about it. Any other questions? Well, they're not tightening. The bond market is. Yeah, people are just buying tech. So concentration's picking up. Breadth is falling off. But that means all of the risk in one basket. The market's becoming less and less diversified, which presents a great deal of risk. Forward yield on volatility. Did I not have that pulled up? I might not have that pulled up. Negative 11.55. Up today, but still not. Yeah, still not negative. Or still not positive, I should say. That's on the daily. Usually we look at this on like the 15. But possibly bottomed out and starting to move up. Hmm. Green light's not really going to go down unless the yield, like, it's not going to go negative. I don't think it hasn't been negative for quite some time. I think the last time it went negative was, it didn't. Almost in October of 2023. I think it stayed just above it. It should not. If it goes negative, like everything dies. Was this because of all the mystery drones? No. Alright, that's it. Thank you guys so much for tuning in. I'll see you tomorrow. Have a great night. Later.